How are you doing? Welcome back to my channel. So today I'm really excited because a lot of people have asked me before how to get a home, how to improve their credit. I've always heard it, and I've heard it so many times that I have horrible credit. What can I do? Can you help me? And the answer, here it is. Yes, I can help you. You know why? Because I know this great guy, my good friend Eduardo. And thank you so much for being here.
Thank you for having me.
Of course, and I really wanted to have you here. I've been harassing him to come here to the studio to actually talk to you guys so we can explain a little bit of what is credit repair. So you own a company that does credit repair, right?
Yes. So I own Texas Consumer Credit Services. We're what they call a credit services organization here in Texas, which I founded in 2014, and we specialize in credit repair, but not only credit repair to help you purchase a home.
Okay.
Which is a little different.
Right.
Your credit repair expert or agent should have an understanding of the home buying process and more specifically the mortgage process.
And you know what? Now that you mention it, it's very funny because I've heard it with clients when they come to me and they tell me, you know what, I have this credit, I checked it on either Credit Karma or I went, sometimes your credit card service has like the FICO score or something like that. Or they might even actually pull up the credit to get a car or something recently and they give them the credit report. But the way it's measured for real estate, it's a little different.
And that's a great question. What happens is you have hundreds of scores.
Right.
Hundreds of different scores. So you have different versions, right? So if you go apply at the very same time for a car, a credit card, and a house, they're all gonna be different. So for example, you have FICO, you have Vantage, and then within FICO, you have from version 2 all the way up to version 9. So what happens is mortgages are regulated, mortgage lenders, on what version they have to use.
Right.
So that version is actually over 20 years old. It's
what?
From 1998 and 2004. But the bad thing is, a lot of things have changed in 20 years. Right? So a lot of the newer score models, for example, weigh things a little differently because they know now that a medical debt might be a little different than running up a $100,000 credit card. Right? So it's like I tell people, they hear all these things in the news, and let's say you have, the new iPhone is out, right? And it's got some features. Well, that's cool, but if you're still on the iPhone,
iOS,
previous iOS, it doesn't matter. Those features aren't there. Right. So it's the same thing with credit report.
This is what I try to do with my clients. I work with every lender. So I always start with one. After that, I get them pre-qualified, and then we're in the contract, and I tell them, you know what, this is where we're gonna do a bidding war, and let's go with different lenders and see who gives us the best rate, and then go back and tell them, hey, this guy gave me this rate, can you beat it? Which is usually splitting hairs, but down 30 years, it's a lot of money, it's thousands of dollars, right?
Yeah, definitely.
But a lot of them are scared.
Talking about inquiries,
right?
Pulling it. Okay. And a lot of people get scared about inquiries because you hear all these things, applying for credit. Well, there's this thing called deduping. Okay. And what that means is, as a consumer, you kind of have the right or to rate shop.
Right.
So auto inquiries and mortgage inquiries, all the ones that are done within a 30-day period, will be basically grouped together. Okay. So you will see each individual inquiry on your credit report. But the algorithm, which is what your credit score is, just a big algorithm, it's gonna see, okay, it's an auto, it's a mortgage, and they're gonna group those groups
in mortgage and
together.
Auto.
Yeah. So it's like when people say the same thing when they go buy a car. They're like, oh, my score went down because they ran into 100 banks. There's probably something else going on because you can go to 1,000 of them within that weekend, and it's gonna affect you the same. But every once in a while, you'll get one that say, no, don't go to that bank and pull it because it may drop your score.
Right.
And that's just not true.
That's not true.
So your score basically has 5 parts.
Okay.
And it's not like a written in stone to the T science. We've got estimations of roughly, right? So if you break it down, the biggest part is payment history.
Don't you see I'm shining? 'Cause when you let me, baby,
It's about 35%. So most people know that part. Like if you have late payments, if you've got collections, it hurts you the most. But if you think of it as when you see the pie chart, it's still only 35%, right? We still got all these other areas that That's why when I hear people on social media all the time, oh, all you have to do to have good credit is pay your bills on time. Well, that's a good start.
Right.
But if you just paid all your bills on time, that's all you did, and you didn't have any available credit and a bunch of inquiries and these other sections we're going to talk about, the best you could have is probably still not even over 500. The second biggest piece, 30%, is what they actually call balance and burden. Most people relate it to utilization, okay? So you have two main types of accounts, revolving and installment, okay? Out of that piece, out of that 30, only a very small part is loans. The biggest piece of that 30 is credit cards.
Okay.
So what we see most of the time is either, especially like in the Hispanic community.
That's exactly what I was going to say.
Yeah, they come in and they're proud that they don't have any credit cards. Mm-hmm. And I say, well, that's good for budgeting, but to have good credit, you should have at least 3 credit cards. But the key is the utilization ratio, what they call it, and that's how much of your credit you're using. So if you have a $200 card and you're using over 30%, which would be $60, you're dropping your score, okay? Ideally, you want to have it under 10%.
Right.
So that's what I make all my clients do. Like, you have to put it in your head. You don't have a $200 limit, you have a $20 limit. So the third part of your score is average age of accounts. So if you're always getting new loans, you can be bringing down that average. Because let's say you have 2 loans that are 10 years old, like your house or something. Mm-hmm. And then you got a whole bunch of these new loans, well, that average is gonna come down.
If I pay my house and then I pay it off like tomorrow, it really didn't do anything.
It may not. Now get this, if that's your only loan,
it might even drop my score because
now you don't have an active loan. So paying off your car early may be great for you, for your budget, but it doesn't necessarily improve your score, okay? It's just about payment history with loans. Ideal credit profile, you have a house, you have a vehicle, you have maybe 1 loan that you took out for a vacation or whatever it may be, on-time payments, 3 credit cards with low balances.
That sounds great, but in reality, let's say in a household, they might have, let's say, 2 or 3 cars. You know, the husband, the wife, and the eldest, right? So, that's bad because they have 3. We were paying 3 cars.
So it's not. I don't want to put the word bad because it's not like, oh, we got the 3rd car, the score is gonna drop totally. We're talking about if you start getting multiple, but a lot of times some of those vehicles may be joint accounts, right? You may sign for your child, you may sign for your spouse, whatever the case. So then that works a little different.
For all my Hispanic people out there, and you know, I always heard my dad saying is like, no, I don't like credit cards. Like I pay everything cash. Yeah.
My grandpa had like I don't know how much money under the mattress, right? He didn't believe banks. That's even another story.
That's another. Yeah, that's a whole other issue. Hey, in real estate, there's no cash. Cash does not exist. Oh, but I have this much money. It doesn't exist. People, they do say that. No credit cards. I use cash, and they, like you said, they feel proud. So no, you need to have something. At least in this country, you do need to have something of credit because you need it for everything.
They want to see that history that you can have them, and you're responsible with them. You've got on-time payments. You can keep the balance. So this is the thing. An unpaid collection and a paid collection impact your score the same. Think of it this way. You get a traffic ticket, you get a speeding ticket.
Right.
Okay? You go, you pay.
You still have it on your...
It's still on your record, right? It still impacts your driving record, your insurance. That's the same thing as a collection. Okay? So that collection just being on your record is what hurts your score. And then that's where kind of credit repair comes into, where credit repair uses the consumer protection laws that most of the time they violate to try to get it removed from your credit report.
Let's say you're 6 years into that, and then I heard it. Don't even answer the phone, or don't even start the payment because it will reset it to another 7 years.
Yes.
Is that true or is that false?
No and yes, and this is where people get confused.
Okay.
Now, quick disclaimer: where I'm not a debt attorney. The 7-year mark is the statute of limitations on how long it can be on your credit report.
Okay.
That cannot be restarted. What people are talking about is the statute of limitations on how long they can enforce the collection, the debt collection. Now that is a state-by-state law. Texas is 4 years. What that means is within those 4 years, they can, if they want to, take you to court to try to get that judgment.
Okay.
To try to get that, okay?
Oh, look at my score now. It's, I don't know, 700 and something. I took care by myself and I did not need to pay anybody. Like, it's, you know, people sometimes are just stubborn. I mean, technically, of course, yes, you can do it yourself, but why going to an expert? And I know this is like dumb questions, so I always say go to the expert, but why?
This is the thing. By law, we have to tell people in a disclaimer before you enroll that you can do this on your own, that you have rights, you can, okay?
Right.
But you hear this word dispute, okay? And sometimes on Credit Karma, they'll click dispute. They'll say this, okay, why did you dispute it?
Right.
Right? And they'll be like, I just disputed it. What? How? Like, what's the reason? You know, what happens most times people will say, because you read a book, you see a YouTube video, just say it's not yours, say it's not. Okay. Nothing about credit repair involves fraudulent acts or lying. If an account is yours and you say it's not yours, you're lying. Okay? If you say you paid it, you didn't pay it, it's not about that. So most of the time when we're fighting an account, they owe it and it is theirs. And we don't deny that. We say it is. But this is violating FCRA. This is violating HIPAA. It's these other things that we're going to use to get it removed. And most people don't know. Most people don't know what FCRA stands for, right? The Fair Credit Reporting Act.
Right.
So unless you know and you've studied all of those laws,
right,
then you could be effective in fighting those accounts. Because all you're going to be able to dispute is if it's not yours. Now, will some accounts come off? What happens a lot of times is people will get lucky.
When you let me, baby, don't you see I'm shining? When you let me.
That they'll just put a generic dispute reason and then it comes off.
Right.
But it can come back a lot of times if it's not a factual error. Anything can come back. Like, they'll try to put something back. But if you've got a leg to stand on of why, right, like a factual error or violation, do that. But most people, what happens is accounts get suppressed. Okay? Meaning that the bureaus and creditors have a certain time to respond. Right. And to meet that deadline, sometimes they'll just suppress it or do whatever. And then once the creditor sends back the information and verifies it, comes back on.
Yeah. That's why when you have a disputed account, you cannot get your home loan.
Go to the loan.
They have to remove it because the credit score that's showing, it's not real.
Never dispute online. Okay, this Credit Karma thing. If you look in the fine print, a lot of times you give up some of your rights. Okay.
Like which right?
Like they don't have to reinvestigate it. So if they say it's verified correct, you can't ask for reinvestigation or certain things.
If you wanna seek more information about credit repair and credit reports, how can we find you?
One of the easiest ways is on our website, and that's texasconsumercredit.com.
I'm gonna link it down below.
You can see us on social media, right. Texas Consumer Credit, on Instagram, Facebook.
All right, well, thank you so much, and I hope you guys liked it, and till the next time. Bye. Thank you so much for watching. I hope you liked this video. Please subscribe. Click on the little bell so you can be notified every time I upload a video. Follow me on my social media. Everything is at Eduardo Koch 01. Click on one of these boxes to watch more content, and see you next time.